Good morning, guys. It's just approaching 11 a.m. on the 8th of November, and it's Kyle here, ready to give you your midweek breakdown. The Australian dollar has picked up quite significantly over the past couple of weeks, and this bullish momentum has been continuing through this week. Earlier on in the week, we had the interest rate decision, which, as expected, remained at 1.5%, which it has done for a number of years now, and I suspect will continue to do so. The difference this time was with the RBA's statement, in which they expected, they seemed optimistic about future growth, which potentially helped the Australian dollar out a little bit more. We've got their monetary policy statement tomorrow, which has the potential to again cause a little bit of volatility in the market. But as you can see, we've broken through that 0.7250 monthly resistance, which is now turned to support as we just attempt at these previous highs here. I do expect to see some pullback. As mentioned at the start of the week, I did expect to see price pull back to this 0.7150, and while that's not out of the question completely, it does look increasingly less likely as bullish momentum continues. It looks as though we may be heading towards this 0.7350 zone, which is actually a daily, I've got it as a daily resistance zone. However, you can see on the weekly how price has responded to this level in the past. So currently we're just attempting to break through that simple moving average in line with these previous highs. I would expect a pullback at least to this 0.7250, potentially lower. As I say, 0.7150 isn't out of the question. If we take a look at the lower time frames, the smaller time frames, then you can see that as we were approaching that resistance earlier in the week, price hesitated, came back down, but the bears failed to remain in control. This was the candle that represents the US midterm elections, which, as you can see, caused a bit of volatility in the market. This candle closed, I'd say, indecisive, with upside wicks and downside wicks rejecting the 0.7300 resistance. However, the bullish real body of this candle closing above that monthly support level does show the overall strength of the bulls in the market. Today's candle has continued upside to push for another test of that 0.7300, but as you can see, we are currently responding to that level quite nicely, potentially looking to reverse down to the 0.7250. From that level, we'll have to assess how price responds to then potentially push down to meet the a test of the moving average support before potentially those levels around 0.7150 and 0.7160 as anticipated from before. We do have the US interest rate decision later today, along with the FOMC statement, which again could bring some volatility in the market. Then we'll have to wait and see for that. Onto the 8-hour time frame, you can see after meeting this 0.7300, price is somewhat indecisive. You can say that we are in a range just here, formed from this inside bar, as the moving average approaches, we could be looking to spike to that level to test that. However, I am looking towards this 0.7250 as initial targets before then heading down towards this 0.721 or 7210, sorry, and potentially 0.7150. So again, yeah, here you can see the range. Price formed the evening star from the 0.7300 resistance, came back, was supported by the moving average, and then again has done the same thing. So we're looking at this current candlestick to break the moving average support to head lower. Should we head to this level and potentially the 7210 and get a moving average crossover, then we could easily be looking at the 0.7150 support. However, currently, if we take a look at the bullish price action, then we are looking upside towards this 0.7350. It's all about how price responds to this 0.7300, and if it does continue to respond to this level, then we will be looking at downside. But as for now, we have had this high, higher low, higher high up here, and then we may just be looking for this higher low to then head higher. Take a look at USDJPY, and bullish momentum has continued throughout this week. We are now trading just at the 113.75 weekly key level, looking to breach this level to move past the previous highs around the 114.50, potentially pushing to 115.70 in line with the Fibonacci extension level. If you remember back to the monthly time frame, we are at quite a crucial region of resistance here. However, with this moving average crossover back here, the retest there, I am looking for price to extend all the way to that 117 monthly level. So we're looking for price to break through this weekly resistance to confirm this. Otherwise, we may see price squeezed in this region, consolidating slightly more. On the daily time frame, you can see that we have been continuing upside with bullish pressure, bullish strength this week. The midterm elections caused this candle, which did spike to the downside, found support, and we also saw that upside spike. So that candle was largely indecisive. And if you see on the, I'll take it down to the 4-hour time frame, that despite a split house, then which would result in gridlock for the US government. Markets would normally like that, as it suggests some further stability. However, the dollar did suffer somewhat, came down to that 113 support level, and I was looking for a test of that support level, if you remember back to the start of this week, which we did have. But then following the 113.75 resistance, as I've said, it is a crucial level. Price fell once more back below the moving averages to find support at that 113 level. Following this, bullish momentum took us back above the moving averages, which we're now using as support, and have headed back to that 113.75. At the moment on the daily, we are looking like we're continuing upside, looking to break that resistance. However, we are seeing upside spikes as we approach this level, so there is the potential to see price fall to at least retest the moving averages once more before extending higher. My bias is towards the upside here. As you can see, we've had a low down here, higher low, potentially another higher low here, but as you can see, bullish momentum is slowing down somewhat. If we take a look at Fibonacci, you can see that if we just fill in some of these levels, so I think initially I had this as that, yeah. So we had this 50% retracement, price extended to that extension target, the minus 27.2. So then if we now extend that fib higher from this point, you can see that this previous low did in fact come right in that refined fib region, failed to close within that and has reversed. So now we are looking at the 114, 160, 114.20 region before extending to 114.50. So as I say, US rate decision later today could cause a pullback, spike downside, a little bit of volatility. However, overall, I remain bullish on this pair. I did mention about the uncertain dollar following the US election. It was a bit shaky. Would have expected further strength. However, as you can see from the dollar index here, we did see price fall lower. However, late in yesterday's session, we did come back up, closing bullish above that major support level. So now we do look to be heading higher back towards this 97 level. First, we've got to push back through the moving average. So the dollar does appear to be picking back up again, following some uncertainty. So now moving on to USDCAD. And to be honest, as I've said, this has been a little bit all over the place, a little bit choppy, indecisive. And as you can see, this week shaping up currently as yet another spinning top candle. We had a spinning top doji this week, currently sitting as a spinning top. We've already tested moving average support, already attempted this downtrend once more. So while I can see the 1.3 major support being met again, have to take a look at these lower time frames to get a better perspective. So if you remember, we had this uptrend here and I anticipated price coming back to the 1.3165, which it did yesterday with that volatility. Rejected that region after failing to break the previous highs. So if you see, we had a low down here, higher low, and we started to make this, to form this trend of higher highs and higher lows. So we formed this high over here at this daily resistance level, formed a higher low, but then now price has failed and now formed a lower high. So as price breaks that trend line and is broken through, just trading below the moving average right now, the exponential moving average, we are looking for price to break through this 1.3060 support and form a new lower low to initiate that new downtrend. So that 1.3 monthly support level does in fact look like quite a nice target before we potentially see a moving average crossover to the downside and a continuation down. However, as I said, dollar could potentially be picking up some strength. So while that is a possibility, we may not actually see price fall at low. Currently struggling at the exponential moving average. Although we have formed this lower high, price has not yet confirmed the reversal with a lower low. So we could still be seeing price reverse from here and make another attempt at this 1.3165. Past this level, we are looking at 1.3250 weekly resistance. However, I do not expect that this week. Obviously, we've still got these bullish moving averages. They are flattening slightly, potentially ready to roll over to the downside. However, as we know, USDCAD can be quite a funny one, not necessarily respecting what the dollar is doing, as the Canadian dollar is so heavily moved by the price of oil. So down onto the 8-hour time frame, you can see that we have been in this price range for a number of weeks, which is shown on the weekly and daily time frame, more so the weekly. But as you can see, the moving averages are largely, well, they are flat here. Price attempting to break back through that 1.3115 level, failing, and you may be able to see that we do actually have a head and shoulders pattern here, with this rejection from the 1.3165 resistance being the head. Then we've got the left shoulder here, the right shoulder having just been formed at the 1.3115, as now I expect price to head down towards that 1.3060 support zone. And the 4-hour time frame is still a bit choppy, but you can see this slightly better. So this is the neckline right here. Saw price form this left shoulder at the 1.3115. And now has just formed the right shoulder. Price coming back up to test those moving averages, which are pointing downside currently. And if I just draw this trend line on here, you can see that price broke through this trend, came back up to retest, which was in line with that right shoulder, and now has melted lower. We're retesting those moving averages before I expect price to head back to that 1.3060 level before potentially rolling over to the 1.3 monthly support. But if we do look at this level, we have been apart from this back in October, we have been ranging above the 1.3060. So my initial target would be that level right there before assessing further price action down to 1.3 monthly support. So should we get a break of this low formed yesterday, then we will be seeing further downside, as we do have this lower high, lower low being printed here. So if we try and get a Fibonacci on here, I take that here, you can see that price came right within that refined region, rejected the 78.6, spiked through with that volatility, but failed to close above, and we've made an attempt at the 0%. So to be expected with choppy price action up and down, but overall Fibonacci extensions around this major support level. So looking like a good level to to meet. Finally, moving on to GBPUSD, and we've had this bullish rally. However, this week, after trying to push further upside, being supported by the moving averages, price has failed at this region right here, in line with the previous highs. As you can see, there is a lot of upside sensitivity around this region shown by this high, and we could potentially be seeing price retrace to close all the way back below these moving averages. I'm not sure if it's a bit optimistic to say that price could close below the 1.3 major support. However, we are currently pulling back from that upside move. We did have this potential double bottom, which if not could be considered as a higher low. However, largely indecisive in the pound. Onto the daily time frame, we came right through this 78.6% retracement level. However, failed to close above that. Again today, we've attempted to push back through that level. However, you can see that we are currently reversing. The moving averages have crossed over to the upside, and given that we haven't even tried, well, we tried to test them with this candle on the 5th, however failed. Since breaking, we haven't really had a retest of this moving average, so I do expect price to come back down and at least tap that moving average in line with the 1.3 major support level before potentially pushing even lower. As you can see, we do have this downtrend, despite on the weekly time frame we said this was a higher low. You can see here that we are still trending down, with this high here, low, lower high, lower low, and we now look to be forming the lower high in the downtrend. So this fib would actually have price going all the way down to the 1.2500 region. However, that is somewhat longer term, so immediately we're looking for the 1.3 major support. As you can see, had that bullish momentum, price formed a spinning top followed by this bearish pin bar, giving us the indication that we were heading downside, and we're now just attempting to break the 8-hour exponential moving average. On the 4-hour time frame, we've already broken through that exponential moving average. As bearish pressure continues towards the downside, we will be looking for that crossover to the downside to meet that 1.3 monthly support. At the moment, I am very bearish on GBP, on the pound, despite developing Brexit negotiations. I don't really see any reason for the pound to take off just yet. I think this bullish momentum has largely been a case of investors buying the rumours that the Brexit negotiations are developing. I think there is still more uncertainty to come in the markets here, so that leads me to believe that we will see further downside. Whether we move past these lows formed in late October is yet to be seen. However, at least this 1.3 major support I can see being met, and as I say, dollar does appear to be picking back up again, which will push the pound even lower. So I hope you guys can understand all that. If not, don't hesitate to drop a comment, ask me a question on social media. Always here to help. So trade safe and have a good weekend, guys. See you next week.